watching Trade of the Week with me, Ntaoleng Lechela. This week, Pepkor, Remgro, Anheuser-Busch and Prosus are up for analysis. Rob Pietropaolo, trading co-head at Unum Capital, joins us with his analysis of these counters. Rob, thank you so much for your time today. Now, we're starting with a part of the retail sector that's been unloved for quite some time, and that's the clothing players. Your pick there is Pepkor. Let's get right into the analysis.
Yeah, well, let's be honest from the get-go. It's been tough to find stock picks in this market.
Yeah.
Especially with the rand volatility that we've seen recently. But at least with the the pullbacks that we're getting in the market, it does help new money come into the market. So the trades for this week are pretty simple in nature, and it's just trying to find opportunity where it presents itself. So yeah, Pepkor really does give many opportunities to trade. It has done so since sort of the beginning of, or the end of last year. If we just look at the setup on the chart here, you can see that there was a breakout that happened around November 2024, and the price does seem to be bouncing off this 22, 23 rand level. We can see now that the stock has become quite oversold in the short term, but yesterday's price action is also quite interesting. If you just look at on that support line, I've circled that reversal that happened during the day. So it opened high, shot down low, and closed back up near the high, probably giving a signal that is sort of the support zone where you should be looking to get in. And this is really based on that price action, that reversal that we saw yesterday. But you can also see that it trades in a very defined channel and has done so since around November 2024. And I don't think you have to be smart on this one. You know, we're buying it very near that channel. I know most of the time, if a stock trades below its 200-day and its 50-day moving average, there's a lot of inherent weakness in the stock. But it certainly does give you an opportunity to try and gain that sort of 15 to 20% if you've got time on your side, especially from an equity trade point of view. It gives you many opportunities to sort of buy the low and sell at the high because it's trading in that defined channel. So my first one for the week is to try and snap up those Pepkors at 23 rand. I know all of our retailers shot up this morning, and this is based on yesterday's close, but I'm sure there'll be an opportunity to pick them up near 23. And then I'd aim for the top of that channel, which I set at around 27.50 if you're not too greedy, and then your stop loss is just below a break of that channel. Then you'd probably want to get out and see what happens next. But I think there could be an easy 15 to 20% to be made on this, just buying the bottom of the channel and selling near the top. It's a no-brainer for me, and it is a stock that I like to trade quite often.
And just on, I guess, the sector as a whole, you mentioned there that we did see those retail counters ticking higher this morning. But of course, uncertainty remains the name of the game with what's been playing out over in the Middle East, even though President Trump said that the war will come to an end soon. I don't know whether we all believe him or not, but it is a wait and see game. Let's talk about, I guess, then buying the dip and whether some of these SA Inc. stock are looking, I guess, attractive at these levels. You talked about Pepkor. We can talk about that retail sector. As I mentioned at the top, they've really been unloved, the clothing retail players in particular.
Yeah, for sure. And I think that had a lot to do with the currency. And the other thing that the viewers need to keep in mind is that conflict, like we're seeing now, is actually quite positive for emerging markets. The flip side of that is, of course, when you see what the oil price is doing, that is inflationary. Yeah. So, you know, we've seen the rand weaken now, which is sort of counterintuitive. The retailers don't really like to see that, especially if they're importing. So, but I do think that there are little spots where you can find value, and Pepkor is one of those where I did find value, as opposed to your ShopRites and your grocery retailers, and that they've also been unloved. But I think Pepkor is well diversified. They don't only just specialize in clothing. I mean, they're doing extremely well from their counter-to-counter deliveries, their airtime and data sales. So they offer a little bit extra than just cheap clothing. But I also think while the consumer is under pressure, they also catch a lot of those bargain hunting, or the consumer that's under pressure that can't buy at your normal Fashinis and your Truers and those kinds of places. So I do think they scoop with that net a little bit more of the consumer, and their pricing is more consumer friendly. But just from a trading point of view, this is an opportunity where a lot of the others aren't showing it just yet.
Yeah, and they have that bank that they're set to launch. So yeah, they're about to give a lot of the clothing counters as well as the grocer counters a run for their money. Let's move over to your second pick, which is Remgro. Fundamentals have improved with strong earnings growth and higher intrinsic NAV. But from a technical perspective, is the share price reflecting that improvement?
I think it does. Quite simply, we always like to say from a technical point of view that the trend is your friend. And the chart clearly shows that. I think this chart goes back to sort of August 2024, and it's really been in a defined upward moving channel. Unfortunately for Remgro, they also have interests in the Middle East.
Yeah.
And I think that's why, if we just zoom in a little bit closer, it sort of broke out of that channel temporarily, let's say over the last 4 to 5 trading sessions. You know, with their Mediclinic business as well. You know, I think, as you mentioned earlier, if Trump could end this war whenever he feels like it, and I think this is where Remgro gives you the opportunity. Yes, it's broken out of that channel, but the minute there's calm in the Middle East, I think Remgro breaks back into that channel. But we can also see again yesterday, it's coming out of sort of oversold levels. It found support yesterday very close to that 200-day moving average. A break of that would have been quite bearish. So you can sort of see traders or investors are nibbling, especially yesterday, because yesterday is a reversal candle. And yes, it's slightly out of that channel. But I do think that if we get a little bit of calm, given the fact that it bounced off that 200-day moving average, I can't see why Remgro doesn't break back into that upward trend and then start to test the top of that band. This is what I'm kind of expecting to happen in the short term. Again, I keep saying that 200-day moving average is quite a significant support. It didn't breach it. It stayed above it and reversed during the day yesterday. And if we try not to get too greedy on this one, we expect it to break back into that channel. I think a target of 190 Rand, where it was not so long ago, is quite doable. And this is quite a nice trade, especially in the volatility, because they are a very diversified business. Besides the SA Inc. part, they do have offshore exposure, but across sectors as well. So it's, you know, it's not just medical; it's also industrial, and that type of diversification is probably good if you want to take some risk off the table.
And just on the NAV, right? We know often investment companies usually trade at a discount to NAV. Looking at that picture, the charts, do you see signs that Remgro's discount is narrowing?
Well, I wouldn't say that from the charts. I would just say that this is a reactionary sort of share price action.
Okay.
So I think investors did get nervous, especially with the goings on in the Middle East, and we know that Remgro has business in the Middle East, and this is why I chose this trade. So whether it's discounted, you know, I'm not sure. I'm just trading the price.
Fair.
And the price is telling me that people liked it yesterday at 175 Rand. And if you like it at 175, I think 190 is the next place to stop.
All right, another counter that has taken a knock this year has been Prosus. Rob, just take me through what the charts are saying there from a technical perspective.
Well, technically, the stock is down 500 Rand in almost a year. Well, that's the reality of it, but it also provided a good opportunity yesterday. We can see that big dip, you know, after creating those highs at around 1250 or 1300 Rand a share. But it does look like there is a support zone that has been created for the stock.
Okay.
again, this stock pick was based on yesterday's close, but this morning, this is the chart that I just screen grabbed this morning, and it did unfortunately gap up for the viewers, but I do think you're going to get an opportunity. So, it did bounce off that support zone or that accumulation zone at around 860 Rand to create what I would suggest would be a double bottom. And then we have that gap up today. So now, unfortunately, we have to wait for a little dip before we get back in. If you're going to trade this for a more longer term, from a longer term point of view, I don't think you're going to be too wrong if you bought them today.
Okay.
The stock did gap up, I think, 9% this morning. I don't know where it's going to settle this afternoon, but buying with impetus today, which is a very positive sign. If we just look at the price action, look, it breached very much right through that 200 and the 50-day moving average. So that we like to call that a death cross. That's when the two moving averages cut below each other. It is moving up out of oversold territory. So we did start seeing buying from last week, although it was nervous buying. We did start to see those little green candles coming up. And then I think today
I guess it's defensive nature.
I think so too. Also, there was rebalancing. On your top, your ZA Tier 1 stocks. So a portfolio rebalancing at the end of February. So I think, the buying has been there, but this morning I think is the confirmation. So if you're a long-term investor, I really think Prosus, you've taken a lot of pain if you've been holding it. You're down $500 a share, even if at 10% up today.
Yeah.
So I think the price action suggests that we might make a run for that 200-day moving average again from here. I think the recovery, and the same counts for Naspers. I've chosen Prosus for trade of the week. And if you're lucky enough to pick them up sort of this week at near 875 Rand, I think it touched 890 Rand this morning on the open. And did start to pull back a little bit. But I think the 200-day moving average at 1,030 Rand gives you quite a nice return for a short to medium term trade that leaves you with about 17% potential upside. But then I would really have a stop loss at around 750 Rand because that would then take you back below that support zone. So if you're buying it up here, around 860, I think when you get close to there, I'd start getting nervous again and getting out and waiting for that next bounce that will get you up to that 1,030 Rand.
All right. Now, last but not least, sticking in that, I guess, that defensive zone, you have picked AB InBev. Just take us through what the technical picture looks like there. Of course, with all the uncertainty, we have seen a rotation back into those consumer-like stocks.
Yeah, so technically we could see that big gap that occurred, I think it was November last year.
Okay.
Obviously, after some disappointing results, the stock has managed this year, let's say at the end of last year, to close that gap, and it hasn't broken back down to those lows that we've seen. They've also, at those levels, the company also announced their share buyback program with a couple of billion. At the moment, the stock has gotten oversold off those highs, and it looks like there is a resistance level, that sort of double top near 1,300 Rand a share.
Okay.
And we've seen that pull back, and we've got that little doji, which was yesterday's closing price, but we've also seen the 50-day moving average crossing up back above the 200-day, which is technically quite bullish. We like to call, that is a bullish signal. The fact that the gap has closed and it hasn't gone back inside of that negative zone where we saw that massive gap down at that open last year, it adds a level of support for the stock. And as I said, the company likes their stock. They're still buying shares back, and I think it offers value near these levels to retest the top of that previous resistance zone. So I'm expecting the share to bounce from here. I'd be calling it a buy at 1185. If you can get it lower, I think you can't be too much wronger. You can get it near that 50-day moving average. I think it acts as support. It loves hugging that line. It has done so for a long, long time. Finding levels on the stock hasn't been easy, but at this point it looks almost like there could be an inverted head and shoulders, which takes the stock to new highs.
Okay.
But that's an unknown. So for me, I would just like to see it retest those previous highs, which I would put near 1,300 Rand a share. But then your stop loss again, tight, below that 50-day moving average. I think I'd bail out, because again, finding levels on it is very, very, very difficult. But I think if you can scoop 9% on the stock, I think you've done well.
How significant is the buyback program from a technical perspective, and can consistent share repurchases create meaningful support level for the stock?
Look, I don't think the share buyback itself affects the daily share price. The company has to methodically buy the stock at an average price over the last few trading days, so they can't go and ramp up the share price on their own. So they have to be methodical and report all those trades. But just from a price action point of view, the company's been buying those shares back for 3-4 months now. So you haven't seen that really shine through, or you can't see that in the actual share price. But the point remains is, if they're confident in their stock at these levels, then I think that adds a level of confidence for traders and investors.
All right, let's leave it there, Rob. Thank you so much for your time and taking us through those counters. That was Rob Pietropaolo, trading co-head at Unum Capital. And that's all for this week's Trade of the Week. But stay tuned for lots more coming up right here on Business Day TV.